Hey everybody, before we dive into today's episode of the AgView Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today. Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new marketing week, April 7th through the 11th. We're lucky enough to have with us today Jarod Creed to give us all of his wisdom and insight as to where this market is going to go.
Well, that's going to be a very short call. You're lucky
Yeah,
that
well,
this is going to be
thanks
30 seconds. You have a
Yep.
good day.
Yep. Thanks, everybody, for listening. We'll catch you next
Yep.
time on the AgView Pitch. No. Yeah, so there's quite a bit to talk about. I don't know if how many answers any of us are going to have with kind of some interesting things that have been occurring in the last week. As we go into this next week, what are we going to be seeing? So I want to start out with tariffs. I mean, there's lots of different opinions. I'm sure you're hearing the same thing. You know, you hear, well, Trump's going to square up with farmers if this market continues to hammer down and all that kind of stuff. Give me your initial insights from your perspective, what you're hearing from clients, and also what your thoughts are as tariffs relate to markets and what we need to be paying attention to.
Well, to one of your first comments, I found it very interesting that it wasn't but 3 or 4 hours after basically President Trump's speech out on a White House lawn that Secretary Rawlins more or less had an announcement saying that it's going to be months before they understand exactly what the U.S. farmer needs in relation to these tariffs. And I think you can take that a lot of different ways. Hopefully, knock on wood, that was just a choice of words that maybe could have been better. But on the other side of the aisle, I mean, that somewhat suggests that we're going to entrench ourselves in these tariffs for quite a while. Now, with that said, we've discussed this for months and months and months that President Trump has laid out the thought process that this is going to happen. So I don't think there can be some type of layer of surprise. But I do take a step back from the tariffs for just a second and the absolute havoc that it has created in tremendous amount of other markets than just agriculture.
Yeah.
But focus on the agriculture fundamentals here for just a moment. On Friday, early Friday morning in the Midwest, whatever that time would be in China, they announced their own retaliatory tariffs. But what does that necessarily matter to U.S. agriculture when they've been very absent from the U.S. markets in the first place? And I take it one step further that their imports on both the corn and soybean front, and for that matter, wheat as well, they have been incredibly slow at purchasing anything from the global supplier. Their import numbers are not what they were a handful of years ago. So the market's reaction to it almost feels like there was still this hopium that there was going to be business to come without some type of tariff application. And now all of a sudden it's like we just write it off completely and we're just going to completely take away a book of business of soybeans to China all over again. And for that matter, soybean meal, soybean oil, all felt the ramifications of it. And in a roundabout way, soybeans tried to lead the way. But at the same time, you could almost make the case that soybeans were following outside markets as well. And, I'm no S&P 500 and financial markets expert in any way, shape, or form, but all you have to do is watch the news and see that your VIX rating, your volatility index, running at higher levels than where we were back during COVID. Largest 2-day drop on points in the S&P 500. I can't say for certain that it was the largest percentage drop we've ever seen in 2 days, but it can't be all that far off. But the volatility that we've seen in the last couple of days is, it mirrors what we were experiencing during COVID, not even what we were experiencing during the trade war. So the amount of uncertainty, maybe the people caught, you know, uh, offsides, out of bounds, whatever you want to put it as, in the last 48 hours is quite astonishing. But what that means here in the future, I mean, we can kind of get into this conversation. I think just for a second, we have to step back and start thinking about the fundamental picture as well, albeit if there's one bright spot in the last couple of days, Chris, the price action in corn has been borderline unbelievable. Borderline unbelievable. When you shave off 6, 7, 8% a day in crude oil and corn closes higher each one of those days, you and I might not ever see that again. And I guarantee you, you've never seen it before. That is quite amazing to take crude oil from more or less mid 70s down to borderline below 60 and have corn close higher each one of those days. Soybeans took it on chin. Wheat somewhat hung in there. The meat industry got absolutely walloped on Friday. I believe both fat cattle and feeder cattle in the front months closed limit down. Hogs certainly didn't perform all that well. So I don't know, Chris. I mean, you got the biggest risk in all of this, to jump ahead here, is probably that you have an index fund in the fund length that is still way too long. And they are a passive buyer, passive seller, and that's gonna it's gonna take time to run its course. And they don't necessarily care about the fundamental supply and demand of any particular commodity. They're basically looking at buying and selling based upon the CRB index or a basket of commodities. So I'll stop there for just a second, see what you want to
Well,
pick out of that, but
yeah.
a lot to process.
Well, yeah. And you talked about the interesting component of corn relative being pretty strong, all things considered, that were thrown at it. But it seems like, there's the old crop corn and there's the new crop corn divergence a bit. And then it, obviously soybeans getting crushed, no pun intended. And then wheat, ugly. I mean, so, you know, it just bodes toward more and more and more corn acres, even though we already have more and more corn acres, doesn't it? I mean, it just feels like, and is that why the new crop is where it's at and the old crop's where it's at? And what do
Uh,
you think of that?
let's compartmentalize that a little bit. Let's start on the soybean front again. Soybean meal. Interesting factoid on Friday the 4th, the commitment of traders. I believe the about a 2 year biggest short position at outside money has had in soybean meal, but that's somewhat reflective of the U.S. crush market. The expansion that we've experienced is obviously producing more and more soybean meal, and we just don't necessarily have the demand to shove that stuff out of the U.S. today. And that's obviously had a drag on the soybean market. To a certain extent, the RFS rumors have given some support to the soybean oil market. I'm not exactly sure where it closed at on Friday, but at the same time, you had soybean oil approaching closer to 50 than 45 and took it in a chin the last couple of days as well. So I'm going to step back from that for a second and think about the corn piece. The outside money position is more or less flat. They're as of Friday's commitment traders, they have a 50,000 contract long. That's pretty much a zero. It does make you wonder if they are in the process of getting short. And to build on that for just a moment, we've talked about the possibility of seasonals in the U.S. corn and soybean market not being as relative as what they used to be. Maybe those seasonals have shifted to more of a time frame of South America weather. And about a month ago, right when corn broke, it did come on the heels of Brazilian planting moving ahead of normal pace. Fast forward to today. You have all this turmoil going on from the tariff talk. Corn has hung in there very well, but on a backside, you have this 95-ish million acre planting intention with arguably, I feel sorry for the folks in the Delta, but with arguably the best 10 to 15 day forecast I've ever seen at this time of year. You're talking about 10 degrees above normal starting basically the 8th of April all the way through, what would that be, about the 17th, 18th of April. And on top of that, you're looking at situations of well below normal precip. And with today's technology and genetics and such, I mean, half the battle is getting it planted timely and in good conditions. And I will be very intrigued to see if the fundamental pressure that that might provide can keep corn on the pedestal that it's currently on versus the rest of the commodities of how they acted in the last 5 days to close this week. That's that's a good old tug of war game. You have direction of money with the fear or hope or belief that we're still going into this inflationary type of environment because of all these tariff applications, but at the same time, no other commodity acted that way. And here we are staring down the barrel of the possibility of 95, 96, maybe even 97. Yes, I mean it, as much as possibly 97 million acres. The faster we get this crop going in the ground, the higher the probability that is.
Yep.
And on that note, all your major seed companies will echo that.
Mm-hmm.
Your top genetics, they're gone. I'm sure at your guys' seed dealership,
Mm-hmm.
supply's tight.
Mm-hmm.
Economics suggest it. And it's amazing that we just slashed the ratio, went from 2.35, give or take, on Wednesday the 2nd down to 2.22 on Friday the 4th. The farmer reacts to those type of price movements. Nobody can dispute that fact. And it just gives me a little bit of an eerie feeling that you can't move equity markets and energy markets in the way that we have with the strength that we have and let corn go out on its own island. That doesn't make a lot of sense. So one of those two markets is wrong. And obviously for your crowd, you hope that the energy markets and equity markets are the wrong one and corn is right, and that we're going to turn everything else around. And on that note, just to kind of stop rambling here, just middle of the day on Friday, I believe it was Taiwan, just a headline of suggesting that they would waive all tariffs in a conversation to President Trump. It seems like more of an electronic play, in my opinion. Doesn't have a heck of a lot to do with the ag sector. And that rallied all markets across the board. And I'm going to use equities again as an indicator. Equities rallied 150 points on that headline and then closed on their dead ass lows, 330 points down in a day.
Mm-hmm.
Something does not add up.
Well, isn't, you talked about volatility earlier, and you think of all the algorithms and how there's so much computer trading anymore that, that's really enhancing the volatility too, right? It's really got this thing going all over the place. And all you got to do is watch Trump talk about tariffs and you can see it in real time moving. Or the other way, or like you said, you get a positive information and then instantly it goes the other way, and then it comes right back. I mean, and that leads me to a question I want to ask you. With the funds, generally speaking, they don't like a lot of unknowns, and there's a lot of unknowns right now. And to your point, to help corn or to help any of these other commodities that really suck right now, how do you get money back into any of these areas, or do you even, until we have some knowns? And, this tariff thing might take a year, it might take weeks, it might take months, nobody knows really. Talk a little bit about, what specifically do farmers need to be watching that are growing corn, soybeans, wheat, cotton, any of these commodities? What are some of the practical things where they need to be watching? I know it's a huge freaking question, but talk a little bit about that scope.
Okay, so historically, you are correct that money that is being tossed into markets do not like uncertainty. But that leads to risk off. And risk off is sometimes being commodities being picked on as a hedge.
Mm-hmm.
Very rarely does that money just completely go to the sidelines. And the reason it doesn't go to the sidelines is, the word funds is such a loose terminology.
Hmm.
You have all
All
these
market.
different
Yeah.
types of participants in the market, and you can view all of them on a commitment of traders report. There's
Right.
300 different types of participants in the market, but your non-commercial participant predominantly is given a big check of money to earn a return on that money. And that doesn't suggest that it's like trying to relate this to a farmer level, that you have this 1,000 acres in front of you and you are so uncertain that you're just going to leave the ground bare. We don't do that.
Hmm.
Neither do they. They don't just let that capital sit in an
No.
account
Right.
because the quote unquote investor can go earn 4, 5, 6, 7% in some type of a CD or a money market, what have you. The capital has to be deployed in some fashion. Maybe corn again here is the darling of agriculture, at least the last couple days, and that's where a lot of that money wants to be piled into. I have my doubts. I have a severe amount of doubts. And then you take it one step further again, you have that fundamental fight against money looking for a return tied to just a simple commodity that they might have some type of a fundamental view, but does that view end up being right? So you take, like you said, there's a billion different ways to answer that question, but generally speaking, with the uncertainty that we have, it should lead to risk off, which runs the risk of commodities being picked on as being a short position, wheat approaching not a near record, but close to it, large short position. As I mentioned, soybean meal. Soybeans have been holding a short position for a while. We just came off of a very large, long position in corn in the last 30 to 45 days. And that, again, makes an individual a little worried that maybe the next step for corn is that it needs to join the balance of the commodities. And you see the funds get short corn. So when you get all the way back to what does a farmer be watching for, maybe be fearful of, I if you take DC for their word, we're not going to back off on any of this stuff anytime soon.
Hmm.
And even if we do, a lot of these countries that we are throwing these tariffs at are not massive importers of U.S. agricultural goods.
Right.
China, massive. Vietnam, to a lesser extent. And if I wanted to just like have a little humor on the subject here for a second, yeah, Thursday afternoon, this headline comes across about Mexico celebrating their exclusion from all these tariffs because of the USMCA.
Hmm.
And it does, I'm going to put the tinfoil hat on here. I wish I had a little filter on the video just to put my tinfoil hat on. I do believe DC is trying to have a unified front, and it's going to be difficult between Canada, the US, and Mexico to take China head on. And maybe that's why we are being a little softer on that front with China and Mexico. And the effort to have that unified front is to achieve what President Trump has said his goal has been for months. He believes interest rates are too high. And what have interest rates done the last 2 days? And what did President Trump take to social media to talk about? He put pressure on Jerome Powell, the Fed chairman. The White House cannot dictate interest rates, but they can influence it by slowing down the economy, slowing down other people's economy, and dare I say the word recession. And then again, it all circles back to, okay, recession is not inflationary. Recession is deflationary,
Right.
slowing everything down. And again, do commodities get picked on because of that? You slow the U.S. economy down, demand suffers across the board. Nothing good comes out of that from the consideration of high prices or low prices.
So from back to the farmer's perspective again for a minute, then specifically, I mean, what's to do other than sit on your hands right now? Is there something that, I mean, they can even do right now other than monitor, watch? I mean, because it's back to the volatility component, and I think it depends on the individual operator too. You know, where's your risk? What'd you do for crop insurance? Blah, 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 all that stuff.
Mm-hmm.
So that's it's individual by farmer. I get that, but what I'm asking is, you know, the general operator that's sitting there with 30% sold of their crop, 30 to 50% sold, or some percentage in there, probably closer to the 25 to 30% sold, and good insurance, quality insurance coverage. Do they do anything? Is there anything to do other than just sit there and watch this for a bit?
Quality insurance and a 25% greater sold, you're actually looking for an opportunity to harvest a little value out of how you're positioned today. And that's maybe a little bit more geared towards corn, not necessarily soybeans, to segregate those two again, to just to kind of keep it simple. Let's just say a producer sitting on a ECO policy. That was obviously a very common conversation the last 2 months.
It was massive. It was more than double what we saw people buy last year, at least in our client base. I mean, it was massive.
More than double, but
Big.
nationally, it didn't even eclipse 10% increase year on year.
Wow, because our clients really bumped it up big
Your
time.
clients are, a little pat on their back, and I apologize if this offends somebody that's listening, but your clients are more progressive than a producer that's inefficient and not going to be here in a couple of years. Call a spade here.
Yeah.
So what does the producer with that do today? 470 insurance price, 95% of that is 447. And that's pretty much right where December corn is today. That basically means that from here somewhere down to $4 is where a producer's risk profile stops. Or maybe reword that their revenue declining, it stops somewhere between 440 to 450 to 4, because county yields can just not climb high enough to stop that.
Get there. Yeah.
But more or less, if you take 9% of the 470 insurance price, that's basically 40 cents. So in my mind, the producer is truly looking for a strategy to keep a seat at the table if things can get better, but cover the majority of the known and defined amount of risk that they truly have.
Yeah.
And again, maybe a little generalities here. Call it 440 to 390. That's the majority of the risk with the producer with an 80 to 85% policy and having an ECO coverage. And at the same time, margin protection as well. Any of these 95% products. Now, flip gears over to soybeans. A little bit of an opinion related here. We've done enough damage the last couple of days that we run the risk of losing some additional bean acres. And I think there were some very smart people that did have expectations of bean acres coming in lower than where they did on Monday on the planting intentions. I'm not so sure that if you have, again, that 95% policy, I think you're just sitting on your hands on soybeans right now.
Hmm.
And by all means, if you have the itch that you just have to do something, it definitely needs to be in some type of a minimum price type of format,
Hmm.
whether that just be an outright put option, whether that be selling cash grain and having some type of out of money call option. There's a lot of weather in front of us, and I am certainly not one of these ones that wants to talk about the if, ands, or buts. The fact of the matter is we do have 7 months ahead of us, 6 months ahead of us before combines truly roll. And from a macro side and a production side, a lot of different things can happen. And fundamentally, as dumb as this sounds, soybeans probably have what's the old saying, the shiniest turd in a punch bowl. They have maybe the better outlook. I mean, we acted really, really well around $10 soybeans multiple times leading up to the last couple of days. We bounced multiple times. I mean, we just took November beans from $10 back up to 10.40 before, the volume got cranked up within all this tariff talk. But you take it a step further too on that front, Chris, that if you think about 95% of 1040, 1050 area on insurance prices, you're more or less talking about a $10 floor again, whether it be you carrying a 95% policy on your farm or you're using something on a county level. I just don't like the idea of committing to a situation of truly locking in a big loss on soybeans.
Mm-hmm.
And that's basically what 9.75 to 10 and a quarter feels like. I'm not suggesting that beans can go to 11 or $12. Quite frankly, a lot of guys need $12 plus.
Yes.
They're,
11.76 is our current cost of
yeah.
average right now.
So in the event that we stick around these prices here for a few more weeks and planting begins in earnest, it gives me a little sense of optimism for better prices to come in July and August. I hate saying
Mm-hmm.
that trying to cast some opinion that there are better times to come in soybeans, but I can't see a world that the US can actually get away from planting less or not planting at least 81 million acres of soybeans. And again, that ratio, we just killed it the last couple of days. Soybeans lost 50 cents on corn in 2 days.
Mm-hmm.
And again, the farmer will react to that. Mother Nature can also assist the farmer reacting to that. So I would like to suggest that famous last words, I'm going to put a big ass range on this, Chris, but 950 to 1050.
Mm-hmm.
I don't know if I'm really interested in doing all that much.
Mm-hmm.
But come 4th of July, I probably need to start making some firmer decisions. But I'm going to give the soybean market a couple months here, and I am going to lean on the insurance program that I elected. Now, if you're a producer without that, I wish you luck.
Mm-hmm.
Right? That's a tough hill to climb. And that's maybe a situation where an individual just needs to identify truly what the good, bad, and different situations are. If you got an 80% insurance policy, that's $3 off the insurance price. If you yield your APH, you're talking about 750 beans
Mm-hmm.
before insurance. Oh, I'm sorry, not quite that. I'm got that wrong. $2.10 off. So you're talking $8.40 soybeans before your revenue protection would do anything for you. So can you stomach another $1.50 drop in the board and cash before your insurance will provide you any coverage? I mean, you're already probably staring down the barrel of somewhere $100 to $200 an acre loss. Why not make it 300, right? No, that doesn't sound fun. But the loss risk in soybeans for anybody with 95% is borderline reaching a level here about as bad as it can get, and it can't get much worse.
Mm-hmm.
And I don't mean that in a bad light. I actually mean it's as worse as it can get in a good way.
Well, yeah, I mean, and then that's what makes it hard, though, still to do anything, even if we go up, even if we get some price strength, we're so damn far away from a break even from a psychological standpoint. Is what I'm getting at for a lot of these guys to do anything. It really makes it tough to sell at that loss when, in fact, it might be one of those years where we got to mitigate or lessen the loss, at least on soybeans, maybe. I don't know. It's going to depend. And the one thing I like about what you're saying is, I mean, sometimes the right thing to do is to not do anything and to
And that's a
monitor.
choice. It is a
Right.
choice.
Yeah. And I think this, I don't know for sure. That's why I don't do marketing advice, but I think, it just feels like right now is one of the times there's so much volatility. There's so much stuff going on. And like you said, we're investing in the crop. We're putting it in. So we're investing kind of like you correlated the farmers to the funds. I mean, we're vested. Now it's just a matter though of deciding at what point do we start to, and it depends. Again, I think it still comes back to the individual producer, where they're at for insurance, what they've got sold, where their cost of
Even yeah,
production is, the differences.
even the producer with something done and having a good insurance, I genuinely feel that here we are in April of 2025. Our greatest risk is not 2025, it's 2026.
Hmm.
Because we've had the opportunity to pull just enough levers here recently to put ourselves in position to participate in something better that we all direly need for 25. And naturally, if that happens, 2026 is going to present some better opportunities
Hmm.
because I am ready to put the nail in the coffin. We're not going to see cost change.
Hmm. Yeah.
I'm afraid 2026 costs are going to be higher than 25.
Yeah.
Variable expense side, I'm ready to admit in the next 3 months, we're not going to see cost change before we start procuring inputs for 26.
Hmm.
And that makes it all the more important that should better times arise, the balance of this year, that's great. 25 and 26, better deals. But what if things get worse right now?
Hmm.
There's a co-op that I worked with for years in Kansas, and their CEO will always challenge all of their marketing staff and just ask the question. Ask the farmer, what is their plan if things don't go their way? Quantify it, measure it.
Hmm.
That if things get worse in 2025 and you have just enough done this year to actually come out better than where current pricing opportunities are, that's going to be really important because you're going to need it in 26. So it's just, I guess my point there is making sure that you have enough done presently that if things do get worse, you're going to be better than where you are today. And
Hmm.
that's just simple math. That's combining the marketing and insurance, and market goes down, my revenue goes up. Simple as that.
Hmm. Sounds good. So my last question, I want to see if I can get your blood pressure up here a little bit, and then
Oh
we'll
boy.
wrap it up. So, um, as far as what's going on with tariffs and the administration coming in and squaring things up a bit with farmers, whether you call it MFP, call it whatever the hell you want to call it, some sort of a reconciliation of tariffs to keep farmers whole type deal. What are the odds, in your opinion, of that coming through at some level?
From what I want or what I think will happen.
What do you think will happen?
Okay. I'm glad you said
Crystal
that.
crystal ball. I know what you want. I don't. I think most people probably listen to you enough. We already know that part, but
Um,
you can tell us both if you want.
First off, I'll give credit where credit is due here. Our friend Peter Meyer, all we're going to do is create another situation of replenishing supply in the US market that has no demand. All we are doing is financially incentivizing more production in a market that we are not the leader in anymore, especially soybeans, borderline corn. And we cannot reinvent the wheel on demand fast enough to make up for that. Now, what I hope and what I think will, what I hope and what I think will probably not happen is there's not going to be enough research in DC to look back from 5 years ago, 7 years ago, the last time we went through this.
Yeah, to get it right.
And I do think that there is one risk that obviously President Trump is a one and done term this go around. Does the government open up the checkbook to keep the current party in office the next term? That is a possibility. And at the same time, you have Secretary of Ag Brooke Rollins earlier this week talking about the importance of getting a farm bill done in 2025. I would try to put more emphasis on getting that done rather than opening the checkbook up to um, compensate for the result of tariffs. And tariffs certainly does have an impact on agriculture, but it has an impact on a whole bunch of other businesses as well. And
Mhm.
Chris, you've heard Damon Mason, our buddy Damon, say this before. Why does one business, why does one business that is impacted alongside a whole bunch of other businesses that are impacted get that check? Why does the mom and pop dry cleaner not get the check when
Mhm.
all of a sudden tariffs have an impact on their business or something in the economy has drugged down their business? I mean, let's call a spade here. I'm sorry, you got my blood pressure up.
That's what my goal was.
Get the inefficient operator out of the business.
Hmm.
They got to get out.
Hmm.
We're seeing it happen 2 weeks ago. In 1 week, two operations picked up 4,000 acres in 12 hours. Two bankrupt farmers that were doing what? Not taking care of business.
Hmm.
The writing was on the wall. It was going to happen, and it's happening. And we're this close. We're this close to this deflationary type of environment. It's a repeat of 14 and 19. Keep your powder dry. Do what you need to do to take baby steps, keeping the farm going in the right direction. So the next time the good money comes around, you're not spending the good times to make up for the bad.
Hmm.
Instead, you're piling money the next good time situation. And oh, by the way, you kept your powder dry. You were able to take advantage of the right opportunities, not every opportunity, but the right opportunities to expand the farm if you so chose, so you could take a step forward.
Hmm. So, in answering your question in just so many words, what you think is going to happen is we're probably going to see some sort of a relief package. It's just who knows, who the hell knows what it is, how much, when, where, why, and how.
The other
Which
complete
nobody
wild
knows,
card
but
out there, which I highly doubt this would happen, is that we would, and I will gladly eat crow if this does happen. But if these tariffs result in a increase of U.S. exports, including agriculture, not just agriculture, but including agriculture. Remember the phase one, phase two trade deal.
yep,
We cannot forget
we
that at
can.
one point in time, we were talking about China importing as much as the possibility by now of 120 million ton of soybeans. I don't know the number off the top of my head, but it's going to be awfully close to 90. They
Hmm.
don't need them. Why
Right.
do we expect somebody to buy something that they don't need?
Hmm. Yep. I don't know how to, we don't, we can't, I guess. I don't know.
So I'm just gonna I'll just throw this one other thing here. Get off this tariff talk, get off the outside market talk here for a second. I do think that fundamentals always win out. And there can be by middle of next week, I think the market will start paying attention to the possibility of not a record, but well above normal planting pace. I'm talking everywhere west of the Ohio-Indiana border, with the exception of North Dakota, running 8 to 10 degrees above normal, well below normal precip, all the way out to the 20th of April.
Hmm.
50% planted on corn is our typical target by May 6th to May 7th timeframe. And that kind of is indicative of, do we have the opportunity to raise trend yield or not? Uh, I would, somebody had to give me a little bit of odds, but I wouldn't be afraid to say we could be 50% planted by May 1, maybe 65% planted by May 5th
Hmm.
with what the current forecast shows.
Yeah.
Forecasts can change, right?
Hmm.
That's we're gonna get back into a weather market at some point in time. I'm just it's never fun to have hope on the potential of a challenging weather forecast and keep, compartmentalize those words. The potential of a challenging weather forecast, not just challenging weather right on the right in front of your face. The market will move a lot earlier than when that forecast may come around.
Hmm. Yeah. I think I think you're right. I think the way, again, the way the forecast looks as we record here now and look at this week of the 7th through the 11th, I think the early plant date for our area for corn is April 10th. There'll be a lot of corn that goes in April 10th. Um,
Hmm.
that I think you're right. I think there'll be a lot of people. We did an agronomy update planting best principles that was out on Saturday. So if people haven't watched that, go back and listen to that. It kind of quantifies what you're saying, Jarod, that, get the planters rolling if the soil conditions are good. And there's a lot of areas where the soil conditions are good, even though there's unfortunately pockets where it's super wet. We get that, but there's also a lot of areas where it's dry and good to go. So
I just had to look at our local forecast. I live in Waterloo, Iowa area, just northwest of Crystal a little bit, but that Wednesday, Thursday little precip opportunity, I think we will take it because it's going to be one of those warm spring rains, and then
yeah, yeah, we've got
we're down.
forecasts in the 70s with not a lot of water. So
Yep.
sure. Well, hey, with that said, really appreciate your time today. I appreciate you letting me get your blood pressure up at the end there. I'll pick on you some more. I think in another month we'll be a lot smarter on some of this volatility components that are messing with stuff. I mean, we won't know everything, but we'll be a little bit smarter and we can have further
Or
conversations.
the other thing, Chris, somebody could listen to this Monday morning and
What in the hell were
DC
you
could
talking
completely
about?
change their tone by Sunday afternoon,
Right.
and everything that we just talked about is completely irrelevant.
Right. Yeah. Well, welcome to this
Commodities.
administration. I think he's and commodities and yeah, there's just the volatility.
It's
Like you
like
said.
it's like the movie The Big Short. The guy says, "Oh yeah, well, what business are you in? Commodities." He says, "Well, good luck with that."
Yeah,
You seem to
right.
feel that.
Exactly. Exactly. Well, hey, Jarod, again, as usual, lots of really good conversation. Really appreciate it. Thank you.
You bet. Thanks,
Hey,
Chris.
hey, one real quick too. If people want to get a hold of you to get your wisdom, is there a good way to reach you or a way that, if somebody wants to chat or get something, what's the best way to get a hold of you and look you up?
Sure, cell phone's always the easiest. 402-680-1744.
Awesome. Thanks. Appreciate that.
Thanks, Chris.
Yep. And thanks everybody for listening here. And we've got a couple other podcasts coming out now that I'm not out in the middle of the country driving all over seeing farms. We'll be kicking a few more podcasts out here. And also, don't forget, like I said at the beginning of this discussion, 19 minutes. Get signed up for that if you're not. And also, if you're watching this on YouTube, Alyssa keeps telling me to do this and I keep forgetting, but subscribe and like our stuff if you can, because it does help us get this spread out to more people. That said, thank you, and we'll catch you again next time on the Pitch.